Okay, everybody, here we go. It's me, Gregory Mannarino, Friday, February 28th, 2025, post market wrap up. With regard to the stock market, one heck of a day, up and down all over the place. We're going to cover what we really should be looking at anyway. Look, let's just get this out of the way. This is where the major stock market indices ended the day, higher across the board. Well, would you be surprised to see this? Global bond yields. Look at the top one, the US 10-year yield, cratering. This mechanism, again, what does it do? Cash seeks yield. You all know that. Well, if there's no yield here, where's cash going to go? It's going to make its way right into the stock market regardless of anything else. You got to understand there's no connection between the economy, of course. You know this if you've been with me for any length of time, and where the stock market is. The stock market is an illusion. As a matter of fact, everything is an illusion built upon people. Look, man, oceans and oceans and oceans of hyper debt. And we're starting to see or pay for what has been going on for quite a long time. There's a heck of a lot of blame going around here. Biden, it's Biden's fault. It's Trump's fault. It's even the Federal Reserve's fault. I'm going to say this. It's actually someone else's fault too, and you might be surprised to find out who. And I'll tell you. I mean, all this plays together, obviously, but there's a big factor missing here. So, with regard to commodities, this is where we went. Oh wow, I forgot to print out. I'm sorry. Crypto. I basically flat across the board. Now, look, you and I go back as far as you want to go. The same words have been echoed by me repeatedly over and over and over again. With regard to the inflationary nightmare situation that we're in, and it hasn't even begun yet. I've been telling you guys for years, it's not going to stop. It's going to get worse. And of course, I've been told for years how wrong I'm going to be. Okay. I've also told people that the economy here and around the world is contracting at its fastest pace we've ever seen. At the same time, global debt is ballooning. And that mechanism has, of course, propped up stock markets to unbelievable heights. I mean, this is so detached from reality, but everyone likes it, right? You like that. You like seeing your 401k plans looking really good. You're very rich on paper. Some of you are probably multi-millionaires on paper and you think it's real. You're feeling really good. You're going out there, you're swiping those credit cards, you're taking on loans, you know, it's a beautiful life, isn't it? You go out there, buy your $1 million home or whatever it might be. Okay. I'm here to tell you it's all fake. It's just all not real. None of it is real. And it's going to get extremely real moving forward here. So what we're seeing unfold here is no surprise, nothing at all, zero. And I'm very proud to say this to anybody who's followed this blog. We have been dead on with all this, with where inflation would go, with the price action of assets would go, the stock market, the economy, and everything else. It's too simple to see what's going on. And once you do see it, you can't unsee it. Now, let's go over some of the economic news that we got today. And then we're going to talk about who's really responsible for the situation that we're in right now. Anyway, inflation continues to rise. Fed's favorite core inflation measure hits 2.6% in January. The personal consumption expenditures price index, the Fed's preferred inflation measure, increased 0.3% for the month, but the pace they're telling you is slowing. All right, however you want to look at it, inflation continues to rise. You don't need to be told this. We all shop. We know what's going on here, and it's completely out of control. Now, this is something else that you will not be surprised about, because I've only been explaining in these exact words. It almost seems like me. This is Market Watch. U.S. trade deficit in goods balloons to a record high. Let's read what they say here. The U.S. trade gap has widened by 25.6%, its largest jump in history, to a new record high. Well, are you surprised about that? No, you're sitting back and you're laughing because you knew this. And I'm here to tell you, you ain't seen nothing yet. Here we go. Closely watch the Fed GDP tracker sees contraction in first quarter. They're finally admitting that the economy is in fact contracting. You and I have known this for years. The global economy, including here in the United States, is contracting. Okay. Regional Fed Bank sees a negative growth rate first quarter. In other words, contraction. This has been going on for years, and they will not allow you to know. The illusion of the market makes everything seem okay. Now, doesn't it? Now, I'm going to let you guys and girls in on a little secret. You can point your fingers at whoever you want to. You can say this is Biden's fault. You could say this is Trump's fault, although the guy's only been in office for like a freaking month now. Okay. You guys and girls knew this was coming before these presidential election, however you want to look at it. Okay. Because I told you, we've covered it 1,000 times. I have said to you, it's not going to stop. It's going to get worse. And unless action is taken to directly stop it, well, what do you expect to happen here? There's nothing, zero that has been put up as a roadblock to stop the tsunami that's rapidly approaching us. You haven't seen nothing yet, people. It's time to wake up. Wakey, man. Wakey. We're going to get hit so hard with currency devaluation. Okay, they can't tell you what inflation really is. It's the purchasing power. You hear that sucking sound? You hear it in your ear? That's the purchasing power of the currency that's being evaporated here, of course, as global debt is inflated to heights that you've never seen before. Now, I want to cover, before I move into exactly who's responsible for this, and it may surprise you on a grand scale. For the most part, we could point that one thing, all right? But this is a poll that I ran earlier today. I want you to pay attention to this. I wrote backdoor price controls, eggflation. As you know, President Trump is throwing $1 billion at eggflation, which includes cash for government subsidies, among other things. In my opinion, this is not a long-term solution. I think we can agree on that. This looks very Biden-like. Yeah, let's throw cash at an issue and hope that it will just go away. This is maybe a pacifier for people to say, you know what? At least Trump is trying to do something. I get that. Okay. Anyway, of course, the real solution longer term is what? It's an incredible thing. I don't even want to repeat myself for 1,000 times. For long term, rising prices across the board is to return purchasing power to the currency. None of that is happening right now. So here was my question. Will we, the people of the world, not just here in the United States, because inflation is a worldwide phenomenon, again, the common denominator, which we've spoken about many, many times, and I have pointed my finger at central banks, of course, colluding with presidents, in this case, to help inflate the debt. All right. But it goes a little bit beyond that. We're going to cover that in a second. So here was my question. Will we see more government subsidies presented as a solution to inflation, which are nothing but a government subsidy is backdoor price controls? They can't tell you that, but that's what it is. So are you expected to see more of that? Or will we ever see purchasing power return to the currency? 90% of you said, unfortunately, more government subsidies are likely. 6% of you said purchasing power will return to the currency, and 5% said other. Now, there were a lot of interesting comments here. Now, look, let's go back to the reality of what we're seeing here. Okay, what are we seeing here? What's happening? Obviously, we are well versed, you and me, that central banks are in a race to the bottom. Who can ever suck their purchasing power out faster wins. That's the truth. Central banks, as you all know, all right, let's just do a quick review here. Their power resides in their ability to issue debt in any form, in currency units of debt. These are not units of wealth. You all know that. Central banks around the world, they issue this currency. You work for the right to borrow that currency into existence. That's all you do. You understand? It's not yours. When you go out there and work your 9 to 5 or whatever hours you might work, you're working to borrow cash into existence and it's not yours. The cash that you borrow into existence, okay, is owned by an issuing central bank. It's owed back to the issuing central bank plus interest they create out of nothing. Okay, that's the nature of the debt based system. The very core of the debt based system is this: in order for it to function, debt must expand and it must expand exponentially. Sure, you could cut all this from over here, but you got to find another way to manipulate it so the debt will continue to expand. And with regard to debts and deficits, all these cuts with regard to the federal government and all the things that apparently is being found here, it's not even scratching the surface as to what would need to be actually done to stop debts and deficits from hyper ballooning. But you see, again, look here, everyone. Don't look over there. But now people are starting to feel the pinch here. Now, with regard to why we're seeing inflation now just happen towards the end of the beautiful man, Biden. See, I don't call him any names anymore. And the beautiful Trump here is because, again, it's the lag effect of all this debt that has been piled on Obama, Trump. Oh, I mean, going back further. But these three, Obama, Trump, and Biden, have worked with the Fed here and you to vastly increase the debt. I mean, vastly, more than double it. I want you to think about that. Obama, Trump, Biden. Combined, these three presidents working with the Fed in this case, take every president going back to George Washington. These three have helped the Fed inflate and maintain the illusion of where we are now. And now the bill's coming due. There is a massive lag effect, as you all know. When you have a situation like we have here, it's too easy. Carlos, did I say thank you? But thank you. Where the money velocity, which is simply this, the rate at which cash moves through an economy is very close to historic lows. It takes a very long time. It can take years for all these extra bills, in whatever form they exist, to make their way through the economy and manifest itself as inflation. Okay, or what we're seeing now, quite obviously. That's just the beginning. And I've been telling and yelling and screaming for I don't know how long about this, and it can't be stopped. It can't be stopped. And I think it's too late for any kind of action right now. Even what I've been saying, which is for President Trump to institute the Gold Reserve Act of 1934. The Gold Reserve Act of 1934 is there for a reason. It's there so a president could stabilize the economy by doing this. President Trump, right now, by executive order, could monetize gold. Back the United States dollar with gold. Revalue gold to whatever he sees fit. 50,000, 60,000, 100,000, whatever he sees per ounce to stabilize the economy. Now, that may be a possibility, but it may also be too late for that too. Okay. With regard to stopping inflation, we need much higher rates than we need them now, because even if, let's just say, for example, President Trump had a sit down or a little powwow with Powell, and they said, you know what, Greg Mannarino's got a point here. We need to start raising rates dramatically to return purchasing power to the currency. Absolutely would wipe the stock markets out. Your investments, your 401ks would evaporate. They'd be cut in half overnight. Telling you wouldn't like that very much, right? So you like low rates. You understand? You like that easy money being pumped into the system. You want to see the debt vastly expand because you want to be rich on paper. You understand? You want to go out and be able to take out those loans for basically nothing. Swipe those credit cards and get those rewards and just pay the minimums or whatever it might be. You see what I'm saying? People want this stuff. Are you starting to see who's kind of responsible for the situation that we're in here? Anyway, little powwow there between Trump and Powell. They start raising rates dramatically. Let's just throw a hypothetical out here. Let's say President Trump, Powell say, we are going to raise the federal funds rate instead of the 25 basis points that we're doing right now or whatever, which is nothing, obviously. It's a joke, and the joke is on us. They raise it multiple percent. I don't know, 5%, 10%. It still would take many months for that to even take effect. So the brunt of what's coming at us here with the tsunami of inflation, which I've been warning would happen from I don't know how many freaking years ago. I told you can't be stopped. It's like a nuclear missile that has been launched. Okay. And this thing is coming at us, it's coming at us. And we know it's coming at us, but no one wants to intercept it because everyone likes the easy money. Everyone likes those low interest rates. Everybody wants to swipe those credit cards. You see what I'm talking about here? I hope you do. So when we're looking to point our fingers at somebody, it's Biden's fault. It's Trump's fault. It's the Federal Reserve's fault. It's our fault. We've all played a role here. Yeah, we like that hyperinflated stock market. You're rich on paper. We want those to borrow for next to nothing with low rates here. That's what you want to do. You want to swipe those credit cards. People, come on, man. You want to find out who's responsible, at least in part? Sure. This is all placed together, but you